Good evening, everybody. It is Sunday, October the 16th. There is nothing more delicious than when you can have your cake and eat it too. Let's explore it. I'm your wealth guy. Let's talk money. Let's talk Sunday market preview. All right, everybody, so thank you for tuning in. I really hope you enjoyed today's video. I definitely want to hear some commentary, so please feel free, comment down below. But let's jump into it. So last week we saw quite a bit of market volatility. We saw markets swinging 1,100 points plus in a day, finishing very strong in the green. Then the next day, no confirmation of a positive momentum, and markets pulled back to finish the week still positive, but a very negative Friday. But there was one important thing I really want to focus on, I think, in this video. So it is going to be a short one, and then we'll talk about next week. But I really want to talk about Janet Yellen, the treasuries, the banks, and the hyperinflationary environment that might be coming our way, but could move the markets very, very much higher. So last week, I believe it was on Thursday or Friday, Janet Yellen from the treasuries approached the banks and asked them if they should buy back bonds, which is essentially money printing, which is essentially hyperinflationary. Now, if you are looking for an article, there was an article, I believe, on Friday the 14th. Yeah, the 14th on Reuters. And the exact article title is U.S. Treasuries ask major banks if it should buy back bonds. And take a read through that article. But one thing that I am going to talk about in this video is very much how this is an opportunity for the Fed to actually do something very, very, I'm going to say shady, but that's really for the lack of a better word. Essentially, what it's giving the Fed the opportunity to do is say quantitative easing, but it's not us. Oh, no, we're not the ones doing it. It's the treasuries. But here's the thing. The money has to come from somewhere, and we know the Treasury doesn't have printing power. So the Fed has the ability to print. Giving money to the treasuries to buy back the bonds that nobody else really wants because we have a liquidity issue. And in fact, the article actually discusses the liquidity issue and the fact that Yellen is very much aware of this major crisis that's in the pipeline here. Because if they don't do something about this liquidity issue, I can guarantee the entire system will freeze. Now, as I mentioned, let's go back because the Fed is actually salivating at this one. And in fact, do you really think the banks are going to say no to the Treasury? I don't think it's a good idea. Quite the opposite. And you can anticipate that if the Treasuries actually do begin this form of quantitative easing, but we can't call it that, bond buying program to increase liquidity, the markets are going to react very, very euphoric. It's going to continue to move the market, or it will move the markets to the upside. We saw, we finished the week last week in the green, and it will certainly continue to push the markets up. Now, this is not something I anticipate we're going to see anything tomorrow, next week even, but it's definitely something that's coming down the pipeline. Whether or not they make it publicly known that that's what they're going to do right off the bat, but it's certainly something that we're going to anticipate. The thing is, this week we really need to take a look at the 10-year yield and the direction that takes in addition to the US dollar. They have been very, very indicative of what the markets are going to do. So we definitely need to keep an eye there. Now, as far as the markets for this week, I'm not really looking to see anything else that's very different. Continued volatility. I think we may see a little bit of pressure in the early part of the week. Not a heck of a lot of numbers coming out. We do have building permits. We do have retail in Canada. In the US, we also have I believe, housing this week. And we'll talk about those on a daily. If you do watch the shorts, they will be there, and we will just bring them up on what's going on per day. but I do anticipate more volatility. I don't see that going away anytime soon. As far as commodities are concerned, I do feel we're going to see continued pressure at least until the end of the midterm elections. Once that passes, I think that is when we're going to start to see commodities start to move to the upside. I know a lot of analysts from precious metals especially are anticipating silver in particular to make an aggressive move to the upside. I'm not going to have an issue with that. I believe in silver as well. Maybe not to or with the same vigor and excitement that many analysts do, but I do see silver certainly moving to the upside, along with all commodities in that regard. I do think we're going to see some upside there, but not yet, at least not until after the midterms. Now, if we take a look at cryptocurrencies over the last little while have been struggling here. Bitcoin is just over 19,000 and a quarter. We may see it bounce around in that range. Now, that is a nice range to be in. It hasn't really gone too far below, hasn't really jumped over that 20,000 mark by much in the last little while. So as long as we don't see any more pressure to the downside, I imagine Bitcoin will probably continue to sit in the channel that it's currently in. Ethereum, seeing a lot more volatility. We're seeing far greater run-ups and then a significant pullback. But again, trading within a nice channel here, I think we'll continue to see that over the next week or so. As far as the general markets are concerned, I think the markets will, as I said, continue to see extreme volatility. Not quite the price swings that we saw last week, unless some financial news does come up and is unexpected, but I think this week we will still see some more pressure to the downside. But for now, that's it, everybody. I will see you tomorrow morning at the opening bell.